What have been the latest developments at Thalia and the hedge fund industry since we spoke to you last year?
Well, let's start with the hedge fund industry first. The industry has gone through a process of institutionalization over many years, which was brought to a head in 2008. Over time, hedge fund managers have invested more in compliance because they have faced also regulatory supervision. They have also invested more in the redundancy of their systems and support, making them stronger institutions. At Thalia, to face this increased demand from institutions and transparency, we have continued to upgrade our due diligence process, integrating both operational due diligence, investment due diligence, and risk management into our process. And we offer bespoke solutions, which we mentioned last year. These bespoke solutions, we offer them through our own Luxembourg SIF, so it's a European regulated SIF. It gives the client the possibility to customize their portfolio, and then we also do customized risk reporting, customized reporting on a quarterly basis, or more often, depending on the client's needs.
Going forward, what should investors expect from global macro hedge funds and from the hedge funds in general?
Well, again, starting with 2008, many things changed, especially for banks and financial institutions. They have been faced with requirements, capital requirements, regulation, Dodd-Frank, Basel III. All of this has basically taken capital off the desks of prop desks within banks, and prop desks were the largest competitors for hedge funds. So basically, global macro managers themselves are facing much less competition, which means there's more opportunity. The disadvantage of banks leaving the business clearly is that they are also no longer intermediating like they did before. So trading desks have been closed down. You've taken liquidity out of the system. Hedge funds have an advantage because they can replace some of that liquidity, but nearly not as much as banks provided. That means that there are risks of systemic and liquidity dry-ups in the market. So there are potential for somewhat bigger drawdowns than we were used to seeing in the past. And that's why risk management is very important.
Yes, I think this is something that we've observed. So yes, there may be an issue with the liquidity at some point, but also this allows the hedge fund manager to step in as the convertible bond market maker in some sense. Basically, the banks are foregoing some profits that our hedge fund managers are there to pick up. I think we could say that hedge funds are becoming more and more the smartest money that is out there on the street.
What are the advantages of the global macro hedge fund strategy, and are there any disadvantages or risks?
The global macro manager will focus on interpreting global macroeconomic data to identify which asset class in what country or region stands a chance of performing particularly well, or alternatively, what asset class or what market is at risk of performing particularly poorly in the next 3 to 6 months. They stay away from analyzing securities at the single security level. Much rather they focus on a bond market of a specific country. So he will invest typically in the treasury future to position himself long or short that market. He can use equity futures, or he can use commodity futures or interest rate swaps. So very broad, very liquid instruments. And this brings with it the advantage of low transaction costs and the ability to de-risk or re-risk the portfolio very actively. He can rotate very quickly or smoothly from one macro theme into another macro theme. He can change his mind. He can implement this quite quickly within the portfolio. This possibility to embrace a very broad spectrum of instruments is another very distinct advantage of that strategy specifically.
I would say that, we're talking about disadvantages, going back to that question as well, that the largest disadvantage in a sense for global macro is that it has a discretionary element, which investors don't necessarily understand. It's not a very easy strategy to, let's call it, model, but it is definitely a significant diversifier for portfolios. But the greatest disadvantage is clear that people don't understand the strategy, and you need to dig down and understand the strategy and the multiple strategies that global macro managers use because they're so discretionary. The other disadvantage, which is perceived as a disadvantage, that not necessarily is a disadvantage, is the use of leverage. And that's why risk management is so important in the
Sure.
global macro strategy. Actually, some of the best risk managers work within global macro funds. We believe you find better risk managers within global macro funds than you do within banks, which recent activity has actually proven.
And more specifically, how would you describe Thalia's expertise and investment history in global macro?
Thalia has always been involved since its outset in global macro strategies, so that makes it 12, 13 years or so of investing experience in global macro. Why? Because of these advantages, characteristics of the strategy that we tried to explain just then. And also, from our point of view, that he has always been focused, and its central mission has been to identify and monitor and keep up to date with managers that have specific abilities, specific talents.
And finally, what's next for Thalia?
Well, in a sense, it's much the same. We are very focused on our process, on our people, doing due diligence, finding talented managers. That will be the same for the future as well. But rather on, let's say, on the client side, we're focusing more on finding other clients. We're looking at Latin America, where a lot of the institutional clients are just starting to invest in hedge funds, and they will probably do so first through fund of hedge funds. So we're working with some institutions there to see if our solutions, either off the shelf, but probably also bespoke portfolios, will be very interesting for them. For us, you know, the team, the process are still central to what we do, and so we focus on maintaining the structure that we have today.
Maggie Rokkum-Testi, Thomas Castri, thank you very much.
Thank you.
Thanks.